Israel launches strikes targeting Hezbollah's economic strongholds in Lebanon as Prime Minister Benjamin Netanyahu weighs plans to attack Iran after a drone explodes near his private residence. In the US, Tesla CEO Elon Musk offers $1 million handouts in key battleground states as the fight for votes in the race for the White House heats up. We will bring you the latest on the election. And European earnings season shifts up a gear with some of the region's biggest companies across the banking, autos and tech sectors, including software giant SAP, set to report this week. Let's take a look at the equity markets then. A bit of a holding pattern filtering through these European equity markets after the gains, of course, stateside over the last week. 6 straight weeks of gains in terms of the S&P notching a fresh record on Friday. We build up to the earnings season, of course, plus some fresh data out of the global economy. The FTSE 100 currently up 0.3%. A little bit of downside, though, coming through on Germany. The DAX down 0.2. Over in France, the CAC 40 is off 0.2%. Some luxury names reporting later this week, which could prove, of course, significant for the French market. Let's flip the board cross-asset then. US futures currently pointing just modestly lower at 5,903, given the run-up that we've seen. 6 consecutive weeks of gains. Bit of a breather. Euro-dollar at 108, down 0.2% right now on the single currency. Gold remaining at fresh record highs. Middle East tensions certainly part of the mix there. Central bank client buying has been a factor supporting the yellow metal. Currently up 0.3% so far in the session. And Brent crude, $73 a barrel, up 7 cents in the session. Boeing pre-market ahead of their earnings later this week on Wednesday. And of course, as we get the latest details out of a potential deal between workers who have been on strike and the union has not fully supported it, hasn't given a view on this potential deal. Could be significant, though, in terms of wages up 35% over a 4-year period, but will it be accepted by the workers? That will be crucial, and that vote expected on Wednesday as well, the same day as the earnings. Currently, the stock is pointing up 3.6% on the back of the details of that potential negotiated deal on Boeing, a corporate we keep an eye on throughout this week. The show starts right now.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie in for Francine in London. Now, Israel's Prime Minister Benjamin Netanyahu has met with top security aides after a Hezbollah drone penetrated Israel's air defences on Saturday and exploded next to his private home. Let's get more details then from Bloomberg's Patrick Sykes, who's been following this for us. Patrick, what do we know about Israel potentially approving an attack on Iran? The discussions have been happening at the highest levels within Israel over the last 48 hours. Have they made a decision? What is the vulnerability of Iran at this point?
Morning, Tom. Yeah, the closest we had to that was Biden saying over the weekend that he does have an understanding of how Israel intends to respond. The Israeli comments have been rather more muted. What we have seen is that flurry of meetings of security officials over the weekend, which I think simply just suggests that there are still things for them to talk about. And yeah, it still remains to be seen what kind of timeline Israel's going to adopt there. We're now at almost 3 weeks since Iran's October the 1st missile barrage. Iran as well, for its part, saying that any attack against it will be considered a red line. So for the moment, we're still firmly in this escalatory spiral, and Iran definitely bracing for that attack very much still.
Yeah, and that is the risk, isn't it? 3 weeks on, as you say, from that barrage of ballistic missiles from Iran into Israel. Meanwhile, of course, the fighting continues on the ground in Lebanon, but also as well in Gaza. How has the death of Yahya Sinwar at the hands of Israeli troops changed the operations on the ground in Gaza? Are we any closer to a potential ceasefire?
I think on the ground, the truth is it probably hasn't changed it. What it's perhaps done, it's probably fulfilled a prerequisite to some kind of resolution of, if not the conflict, then reaching a ceasefire deal. But in itself, it's not going to be enough to get there. And that's why we've seen over the weekend, if anything, an escalation in the operations on the ground, both in northern Gaza and in Lebanon. The other missing part that I think Israel is definitely going to want to feel that it can fulfill before signing off on any ceasefire is obviously the hostages, right? And that's why those military operations, I think we can expect to continue. Still around 100 hostages, Israeli hostages, thought to be in Gaza. And I can't see Israel approaching a ceasefire, certainly not finalising one, without getting some clarity on their fate and ideally bringing them home.
OK, Bloomberg's Patrick Sykes on the latest out of the Middle East and what could be another pivotal week, of course, for that region. Patrick, thank you. Back to the markets now, and stocks are trading in a tight range, with investors positioning for the US presidential election, as well as boosting gold holdings on those increasing tensions in the Middle East. Very pleased to say we can get more analysis across these markets now and bring in BlackRock's global chief investment strategist, Wei Li. Wei, thanks for joining us. We have the near term, the medium term, the long term. In the medium term, for you and the team, what is most consequential right now for these markets? Is it the geopolitics? Is it the earnings? Or is it central banks?
Good morning, Tom. So if we think about the current environment, we're talking about an environment where growth is holding up really quite well, including the top-down macro and bottom-up micro earnings momentum. We're also talking about an environment where inflation is falling for now, because we have pandemic mismatch unwinding, taking inflation lower. And we're also talking about an environment where central banks are cutting rates. And that combination is a combination that is pro-risk. And that is also why we're currently continue to like US equities at this juncture, despite the fact that there is a lot of uncertainty heading into election and also some concerns around valuations.
Yeah, on the uncertainty when it comes to US politics, how should investors be factoring that in, Wei Li? Is there a way to mitigate some of that expected volatility? How should we be thinking about positioning around the US political risk story?
One strategy that we have seen investors do is to buy protection in the volatility and market rather than getting out of their equity position, because momentum is strong. So you see this decoupling between realized volatility and implied volatility, suggesting that the demand for protection after election is quite high, but the levels are still reasonably reasonable at this juncture, which is something that we're looking at. But more broadly, I would say, if you look at the polls, they are still extremely close in swing states. The betting market has been very volatile, but polls are still very, very close. So as we think about the election, we try to identify themes that are likely going to be true no matter who wins the election. And one such theme is greater fiscal trajectory, greater fiscal spend. And that supports an environment where term premium for US government bonds will have to increase. 1 month ago, it was at 0 basis point, and now it's at 35 basis point. We expect that to continue to increase, reflect the greater fiscal trajectory as an inevitable direction of travel, no matter who gets in the White House.
Yeah, well, on that point, interesting to hear from some strategists at T. Rowe Price this morning, suggesting that 5% on the 10-year could be tested in the next 6 months. It sounds like we've got some technical issues, so we've lost the line to Wei Li. It happens with live TV sometimes. We'll try and re-establish that line with Wei Li, BlackRock's global chief investment strategist, on how to position in these markets, factoring US political risk, but of course the moves lower in rates from these central banks, and certainly traders have been adjusting around that, now seeing fewer than 40 basis points by the end of the year from the Federal Reserve in terms of further cuts. Coming up with just 15 days to go, we're going to bring you the latest on the race for the White House as Elon Musk makes a surprising and controversial intervention. We bring you the latest on that front. The details are next. This is Bloomberg. Welcome back. Now, the threat of higher US tariffs has become a major talking point among European CEOs after Donald Trump said he would raise import duties if he returns to the White House. Last week, the Republican nominee said tariff, quote, was his favourite word. Let's bring in Bloomberg's Valerie Teitel for more. Valerie, how are corporate executives, particularly in Europe, adjusting to the threat of additional tariffs from a Trump presidency, if we get that?
They do seem a lot more concerned about this word tariff. It's showing up more often in these earnings announcements that we're getting from these European companies. But I also want to note that we're seeing also goods-related sectors, think industrials, think autos, anyone exporting goods. Those have underperformed the broader market in the last few weeks. Here, I'm showing some Barclays indices. This one in white is the EU tariffs basket. The one in yellow is the EU tariffs basket as related to China. So showing some underperformance in those good-related sectors as we head closer to the election. I also want to show another chart on just how these basket of U.S. stocks that are keen for a Republican win have been outperforming a basket of Democratic stocks that would outperform on a Democratic win. These are really interesting indices. They're from Goldman Sachs, but we've seen, in the last basically since October 1st, the Republican outperformers has really grabbed the market's eye as those betting markets show slightly more risk that Trump could be in the White House next year. And lastly, we do want to end on Bitcoin, Tom, because this is also seen as sort of a Trump trade. We know that Trump would be maybe a bit nicer in the regulatory environment when it comes to cryptocurrencies. And we've seen Bitcoin rally 10% over the last week. It flirted with the $70,000 mark overnight. It's still up over the weekend session, but down off those highs that we saw in Asia.
OK, Bloomberg's Valerie Teitel on the Trump trade. Thank you very much indeed. Let's bring back in Blackrock's global chief investment strategist right now, Wei Li. Wei, I think I'm right in saying that you think the markets are getting over their skis in terms of how much and how many rate cuts they are pricing in by the Federal Reserve. US politics and the fiscal expansion is part of your view on this. Where do you see the 10-year yield then? We're currently at what, 406 on the benchmark 10-year yield. Do we get 409 in fact today? Do we test 5% say in the next 6 months?
That's a great question. When we think about where the 10-year would head towards, you have to have a view around policy path, and you have to have a view around term premium that comes on top of policy path. We think on both components of 10-year yield, there is room for that to go higher. So recently, in response to stronger data coming from the US, markets shaved off more than one cut by the end of 2025. We think that maybe 2 more cuts could be shaved off, because ultimately beyond the current period of this inflation and inflation coming down, structural forces are likely going to push inflation higher, and we're going to settle inflation at a higher level compared to pre-pandemic levels, and that would push policy path higher. And now, Tom, you also talked about fiscal trajectory, and that is in fact why we believe over the longer term, and here I'm talking about 5 years and beyond, term premium needs to go even higher. So currently it went from 0 basis point last month to now 35 basis point, and with greater focus around fiscal divergence as well between US and Europe, for example, that supports term premium in the US trending higher to 100 basis point over the longer term horizon. So all of that should push 10-year higher, which is why we prefer government bonds in Europe, including the UK, over US Treasury long-term duration, because of this divergence in fiscal trajectory.
OK, so that's the divergence on the fiscal trajectory, and really, really interesting in terms of the outlook over that 5-year period. Wei, when it comes to the here and now, the earnings season, what are you and the team scrutinising? What for you is most important out of the numbers that we are getting from these corporates?
I would make a statement that kind of continues from the previous discussion around fiscal. Because of the fiscal divergence, fiscal trajectory divergence, we have seen growth in the US quite a bit stronger than Europe, and that has translated from macro to micro as well. So if you look at the last earnings season, US equity market grew 13% year on year the last earnings season versus European equities grow 1.7%. So there is a decoupling divergence between Europe and the US there as well. And that decoupling, that gap is expected to narrow, but with US still in the lead. So we continue to prefer US equities over European equities because of the different growth dynamics. And within US equities, we previously have gone quite concentrated in AI and tech-related themes. We see that broadening out. The gap between Magnificent Seven and the rest of the index in terms of earnings momentum is expected to narrow too. So we like US equities now across the board as an overweight.
OK, a broadening out in terms of the gains coming through for US equities, and that decoupling pretty pronounced with 13% earnings growth versus a little over 1% for Europe, though that will narrow, is the view from Wei Li, BlackRock's global chief investment strategist, with the insights on these markets and valuable insights as well. Wei, thank you very much indeed. To the US politics then, and the details around how things stand and the role of Elon Musk, because on US elections, Musk says his super PAC will give away $1 billion, not $1 billion, $1 million, maybe he goes to $1 billion. We're at $1 million right now. $1 million daily, $1 million daily until election day, 15 days out, to a signatory of a petition calling for free speech and the right to bear arms. What is going on? Let's bring in Bloomberg's Kriti Gupta for the details. How controversial is this? Hello, Kriti. How controversial is this giveaway by Musk? Is it legal?
It's legal at the moment, but it's very controversial. Already you are seeing Democrats say, well, this is kind of skating the lines. We know campaign financing has always been a hot topic in U.S. politics in general. But the way Musk is doing this looks like a lottery on the surface. It's not necessarily a lottery because it's being done through campaign financing and through this thing called a super PAC. The question around the legality of it and that condition around this petition, that's where you start to have this question of kind of duress and other legal questions. The problem, though, Tom, is that time is not on their side for the folks who are against this. We're 15 days out from the election. We also know this is something that is specific for swing state voters, so not eligibility is also a big question in terms of how much they actually get. Also, who actually wins the $1 million in terms of this daily kind of report? Do you get is it a lottery system? Is it, a name out of a hat, for example? There are a lot of questions around it that are likely to not be the priority going into an already very contentious election. OK,
Kriti Gupta, thank you very much indeed on Musk's role in this US election, as the polls still show, of course, a very tight race, even as the financial markets increasingly bet on a Trump victory. Kriti Gupta, opening trade anchor on US politics. Thank you. Coming up, a potential breakthrough at Boeing, with the union representing 33,000 workers on strike. We bring you the latest next. Boeing pre-market is up. This is Bloomberg. Welcome back. Happy Monday. Now, Boeing shares are rising pre-market, as you can see, 3.7%. The union, representing 33,000 of the company's striking workers, has hammered out a tentative accord that includes a wage increase of 35% over 4 years. A ratification vote is set for this Wednesday, the same day as the company's earnings. Let's bring in Benedict Hummel, then, our global editorial leader in aviation, for the details. Benny and team will be very busy on Wednesday. Benny, how much does this deal then move the needle?
So if you look at the stock, there does seem to be quite a bit of optimism that this is the deal that will get them over the hump. Just to remind people, we've been in 5 weeks of continuous strike here that have really brought to a standstill production at Boeing, particularly the 737 aircraft that's so crucial to the company. And the latest offer, as you said, 35%, a couple of other sort of sweeteners thrown into that, a signing bonus, a little bit on the retirement front, and a couple of other things. So overall, pretty close to where workers wanted this to be. It's not quite at the 40% magic number that they wanted, but sort of in aggregate, probably something that will get them almost over the line, or maybe properly over the line. There has to be a 50% plus one sort of approval. That's on Wednesday. Voting will get underway as Boeing unveils its earnings during the day, and then the voting booths, as it were, will close in the evening. So it won't be until sort of in the middle of our night and in the Asian morning on Thursday that we find out whether indeed Boeing has managed to avert the strike.
How did this offer come about then, Benny?
So it came out over the weekend, bit of a surprise, and dare I say, one that sort of destroyed another weekend for us as a team, but we happily picked it up. And the offer had a lot to do, actually, with a bit of support from the White House. They came in last week, and they sent their Labour Secretary up to Seattle. She spoke to both parties, so some sort of shuttle diplomacy, as it were, back and forth, trying to talk to both sides. And for the workers, there was long this demand that they wanted the pensions reinstated. And it might well be, we don't know this yet, whether the other side said, look, you're not going to get the pensions back, go with what you have, and that's where we are.
Benedict Hummel, our global editorial leader in aviation on Boeing. With pre-market, the shares up 3.6%, 3.5% in fact right now. But Benny, thank you. Coming up, Hezbollah's precise drone attack near Netanyahu's coastal home north of Tel Aviv has stunned many Israelis. We get the latest on the geopolitics of the region. This is Bloomberg. Welcome back. Now, Israel launches strikes targeting Hezbollah's economic strongholds in Lebanon as Prime Minister Benjamin Netanyahu weighs plans to attack Iran after a drone explodes near his private residence. In the US, Tesla CEO Elon Musk offers $1 million handouts in key battleground states as the fight for votes in the race for the White House heats up. We bring you the latest on the US election. And European earnings season shifts up a gear with some of the region's biggest companies across the banking, autos and tech sectors, including software giant SAP, set to report this week. To the Middle East, and Israel is discussing the next attack on Iran, a day after a Hezbollah drone exploded next to the private home of Prime Minister Benjamin Netanyahu. To dive deeper into the tensions in the Middle East, let's bring in Robin Niblett, former director of Chatham House. Robin, thank you very much for coming into the studio. So we start on the Middle East, and it seems there have been discussions at the highest level over the weekend in Israel about what the response will be, maybe the timing of that as well. We have very few details for obvious reasons. What is your expectation as to what Israel does at this point when it comes to Iran?
Well, it's taken longer for them to hit back than many people expected. After the first attack, the response was pretty swift. But this time, it's been a very measured time. Obviously, there have been discussions, as we know. Should they hit nuclear facilities? Should they hit energy facilities? Both of those do not have the support of the White House for obvious reasons, one of escalation, the other of impacting energy prices ahead of the election. So all of the talk has been about the right kind of military targets. That would be a like-for-like type of attack. And I think that's probably where we were leaning. The problem is that when you have Hezbollah seemingly targeting the Prime Minister of Israel, and Hezbollah obviously being armed by Iran, you then end up with personalization, a potential risk of a more aggressive hit. Still, my expectation would be a military strike against military targets rather than the others, simply because he wouldn't necessarily have the US support for undertaking something more significant. At the moment, Israeli forces are stretched. They're succeeding, but they're stretched at least on two fronts. If you throw in the Houthis in Yemen, they're on three fronts. If they were to get a really serious front with Iran, it becomes less predictable.
OK, well, on one of those fronts, then, the fight against Hezbollah, and that continued over the weekend, targeting a number of facilities linked to some of their economic infrastructure. Do we have clarity on what the game plan is for Israel when it comes to Hezbollah?
Look, it feels to me like they're proving themselves able to push further than they thought they would. And they're seeing this moment of opportunity, an Iranian regime that is discombobulated, I'd say, at the moment by the series of attacks, and paranoid that they might be subject to some type of pager attack like the ones that were undertaken against Hezbollah. So you've got an Iran that is on the back foot, that seemingly does not want to do with its main proxy in the region, Hezbollah. And therefore, I sense that what was meant to be at the beginning a sort of cease and desist, push them back above the Litani River, which is about 20 kilometers north of the Israeli border, is now becoming maybe we can change the whole balance of power in Lebanon. If we do, I, Netanyahu, go down as somebody who not only destroyed Hamas, killed all of their top leadership, I've destroyed Hezbollah, removed that threat from the north, I've pushed Iran back. I mean, I think at the moment there isn't a clear sense, even within the Israeli leadership, of what the ultimate objective is. It is being tested, I'd say, week by week.
Interesting. This is a week-by-week testing of how far they can go. Meanwhile, there are reports that the Shin Bet head is going to Egypt, if not already there, possibly for talks, it seems, around a potential ceasefire. How far away are we, given everything that's happening on all those fronts? What is the prospect of getting a ceasefire and getting the hostages returned to Israel?
I just continue to think they're extremely low, simply because for Hezbollah to give back the hostages, in essence to surrender, would simply be an invitation to their complete destruction. And at the moment, as they're saying, and their replacement leaders have been saying to Yahya Sinwar, we'd choose martyrdom, over freedom. So I think it's highly unlikely. However, where you're at the moment, from an Israeli perspective, is you want to slow down the amount of effort and troops you're having to deploy in the whole Gaza region. You need to deploy more. If you do want to take advantage of the opportunities in the north, in Hezbollah, you're going to have to move sufficient amount of troops up there to do that push. So I think at the moment the prospects for an absolute breakthrough are low.
OK, Robin, thank you. Stay with us. We're going to come back to you for your insights, your analysis on Eastern Europe, the role that Russia is playing in some of those ex-Soviet states as well. And on that, the geopolitics of Eastern Europe then. Over the past hour, Moldova has voted in favour of a referendum on joining the European Union. But the vote was far closer than expected. A setback then, to some extent, for the Moldovan President Maia Sandu, who also secured victory in the first round of the nation's presidential election. Let's bring in Bloomberg's Piotr Skolimowski then in Warsaw for the latest. Piotr, how significant is this referendum result for Moldova, and also what it means for the EU and Russia?
Hi, Tom. So indeed, it's a very significant referendum result. Moldova was holding a referendum on future EU membership, and the results are just in. The margin with which they approved the referendum, or the path to EU membership, was razor thin. It's 50.2% at this point, mainly due to the vote from Moldova's people living outside, so diaspora of Moldovans living outside the country itself. So clearly there is a willingness, or there's an ambition to join the EU, and that path has won approval, but mainly by the people living outside. Obviously, what we have to remember is that we're talking about a very small country, 2.8 million people living in the country, very poor, former Soviet republic, wedged between Ukraine and Romania. So it has a very important geostrategic position. And before we went into this election, we saw a campaign that was marred by numerous examples of meddling from Russia, or at least that's what Moldova's leaders were saying. They uncovered various schemes of trying to buy votes, to influence the election. We heard from the EU minister who told us last week Russia spent 100 million euros just to have an impact on this election. Again, the Kremlin denies any of it, but it's a tug of war between Russia and EU here for sure in this election, and it shows how difficult it's going to be going forward for this little country in Europe.
Yeah, indeed. Well, talking of Russian meddling, Piotr, we also had the Bloomberg scoop this morning on Georgia, another Eastern European state, of course, stuck between the West and Russia, and a comprehensive espionage campaign at multiple levels carried out by the Kremlin. What are the details?
Well, indeed, it's a great scoop from our colleagues. We have to remember Georgia is holding election as well. This is happening on Saturday, where we have a party of a billionaire who's pro-Russian pitted against the forces who think this country is also sort of sliding towards Russia, rather away from EU. And the report shows that basically over the years, Russian spies were watching Georgia's government, major companies. They had extreme insight into the foreign ministry, the finance ministry, central bank, key energy telecommunication providers. They're all penetrated for reasons such as potential sabotage of a critical infrastructure. So that's basically that's been going on for since 2017 until 2020. At least that's what the data is showing.
OK, Piotr, excellent update out of the region, of course, on the results out of Moldova and looking ahead to Georgia's presidential election as well. Piotr Skolimowski, thank you for the details. Let's bring back in then Robin Niblett, former director of Chatham House. Robin, we were talking about the Middle East before. Now we switch focus to Eastern Europe. How do you think Putin responds to the result out of Moldova? They have voted by a very slim margin to join the European Union. What do you think the response will be from Moscow?
Well, I think the response will be, wow, we did a pretty good job. Two-thirds, roughly, was the polling of Georgians supposedly, of Moldovans supposedly in favour of becoming members of the EU in the future. And in a referendum that, after all, was about putting application for the EU into the constitution of Moldova. So it's not about actually joining. There's a long negotiation still to go ahead. But Maya Sandu was hoping that by combining it with the election, where she's quite popular, to go for a second term, she would get a big get out the vote and get some wind in the sails. Rather than wind in the sails, this has scraped through the narrowest margin. That two-thirds majority has evaporated down to a few thousand votes. So she's in a much weaker position. I mean, the EU didn't want the referendum to take place because they knew it would invite Russian interference, which it has done at an epic scale financially for the size of the country. So I think if you're Vladimir Putin, you say, tick, another bit of instability there. Now you've got a country that's, by a few thousand votes in favour of joining the EU as opposed to leaning towards the West. OK, I didn't get it to go the other way, but let's see how the second round of the election goes. She was hoping to get through on the first round. She was at, I think, 38% to 28%. That's a lot tighter than was expected as well.
Versus someone who's been characterised as a pro-Kremlin candidate.
Absolutely. All the opposition are.
So that's really interesting. And I think one of the key words is instability, isn't it? So we watch for that in the weeks ahead for Moldova and whether they try to profit from that. Meanwhile, Georgia, and we had the details on this Bloomberg scoop in terms of how Russia's been trying to meddle there. How far do you think they go in trying to bring Georgia, Tbilisi back into the fold?
Look, I will say very sadly that I think Tbilisi is being pulled away from Europe, if you want to call that, away from the EU, and closer to Russia. Ivanishvili, the sort of behind-the-scenes leader, you might say, very close to Russia, made a lot of his money there. It doesn't surprise me at all to hear, although fantastic to get the proof, that all of their systems have been penetrated. It's right close to the border. In that part of the Caucasus, in a way, it is isolated, you might say, Georgia, from the closer European Union. At least Moldova is next to Romania, which is an EU member. It's got Ukraine on the other side, which is fighting to be part of the EU. Georgia is exposed, and it is one of the three countries that in 2008, the George W. Bush administration wanted to do that extra push to get into NATO. I don't know if you remember then, but they called out Moldova, Georgia and Ukraine. And the first thing that happened was then the invasion of Georgia that took place into the north, taking South Ossetia. You know, Putin was determined that he would not lose Georgia to NATO and the EU. So this is part of a long-term game. I'd say he's thinking the balance is definitely tipped in his favour on Georgia.
Very interesting.
And is maybe tipping a little bit his way on Moldova.
OK, really smart and valuable geopolitical insights there from Robin Niblett, former director of Chatham House on the Middle East and Eastern Europe and Russia's role in terms of Georgia and Moldova. Robin, thank you very much indeed. Coming up, we're going to switch focus. Hedge funds are betting against the green transition. That is the subject of today's Big Take. That comes up next. Stay with us. This is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
The conversations that matter and the insights you need. This is The Pulse. I'm Tom McKenzie in London. Now, Wall Street is betting big against the clean energy transition. Bloomberg analysis of more than 500 hedge funds reveals they are net short batteries, solar, electric vehicles and hydrogen, while going net long thermal coal. Yes, going long coal. Let's bring in right now Bloomberg Big Takes Tasneem Broga. And Tasneem, part of the team who's written up this fantastic Big Take. You can find it on Bloomberg.com and on the terminal. Tasneem, just outline for us what you found in this reporting and why it is significant.
Yeah, good morning. So if we start with the second point first, the significance. I suppose what's interesting here is that it comes after 2 years of the Inflation Reduction Act, which is, essentially a piece of legislation that provides tax incentives to do green investments. And it also comes despite enormous legislative and regulatory framework supporting green transition in the EU. And despite all of this, hedge funds as a group, they're not looking to ideology, they're just looking into how to make money, and they're largely betting against key green sectors. So as you mentioned specifically, more hedge funds are short solar than are long. The same applies to batteries, the same applies to hydrogen, the same applies to electric vehicles. At the same time, there are more hedge funds that are long oil, gas, and even coal, which, as you know, is the dirtiest of all fossil fuels. So despite historic stimulus packages, there's just limited appetite to invest in the green transition.
Yeah, because some of those prospects, I mean, you could make the argument as an investor, you follow the policy, follow the stimulus, and if you were to do that on these fronts, it would lead you to investing in the transition. But that's not happening. Why is that not proving a catalyst?
So it's a sector that's very sensitive to interest rate changes. And we saw, when there were emergency interest rate cuts during the pandemic, and there was very little demand for energy, the green sector did well. When the pandemic ended, lockdowns were rolled back and the economy came roaring back. Interest rates rose, and there was suddenly a lot of demand for energy, with fossil fuels sort of filling a lot of the, the intermittency that a lot of renewables suffer from. And so in that environment, they've just done badly. There was an expectation early at the beginning of this year that with interest rates coming down, that would change. There would be a rebound in the green sector, but that hasn't happened. And the reason we kept hearing from the hedge fund managers we spoke to was geopolitics, and specifically tariff wars. They just don't like tariff wars. They don't like the sort of the uncertainty around this. They don't know how to trade it. That is the US and Europe as well imposing tariffs on China that are very detrimental to the solar sector. And then China obviously also retaliating. And the outcome of the US election is obviously also going to be key in determining how that tariff war plays out. So we had hedge fund managers talking to us about, if you see China in a sector of the green economy, run for the hills. And what we're left with is a situation where, climate change is a global issue, but it's bumping up against nationalism and protectionism even in the form of tariffs, which are basically just leaving a key investor sector sort of put off.
OK, Bloomberg's Tasneem Broga on today's Bloomberg Big Take on how hedge funds are, for now at least, largely avoiding investing in the transition, in fact, shorting some of those sectors. Tasneem, thank you very much indeed. Now, elsewhere in finance, big European banks are due to report earnings this week, including Deutsche Bank, Barclays and NatWest here in the UK. Let's get more then from Bloomberg's Jenny Serrain, who, of course, with the team, follows all of this for us. What are the expectations for UK banks? Let's start there, Jenny.
So I think, obviously with rates coming down, that normally spells pretty big trouble for banks. But here in the UK, a lot of these banks have set up what's called a structural hedge to kind of protect them against that. And almost every analyst we've talked to and all of the investor community is really betting that that's going to come in and really help their earnings results in the next few quarters, not just this quarter. And so I think that will be a big question mark, is, how much of this is just kind of accounting magic versus real kind of earnings firepower. But at least on the UK front, structural hedge is kind of the big buzzword for the
OK, we love a structural hedge. Yeah. OK, why don't American banks do they do structural hedges?
They do not. It's a very unusual thing that, European banks love to rely upon. Okay. I mean, last week we've heard from the U.S. banks that trading and investment bank kind of really came roaring back to life and surprised folks. I think that is the other big thing that we'll look for this week. So can the European banks keep up with their U.S. counterparts? That'll be a big question.
OK, what are the other challenges that they could be facing?
I think, the rates coming down question mark, it kind of presents two things for them. So on the one hand, when rates were going up, these banks were really complaining that, oh man, our depositors are coming to us, they're demanding more money. So that pressure sort of goes away. But at the same time, obviously, they're making a little bit less money on the loan side. So how they navigate that, I think we'll hear a lot about cost cutting this quarter. Does that translate to job cuts? I think there's going to be a lot on the table that investors are really looking for answers about.
That could be painful. OK, Jenny Swain, thank you very much for the really great setup of the earnings season with the focus and the lens on the banking space. Jenny, thank you. Tomorrow, we have, talking of the macro on the banks and central banks, we have an exclusive interview with the ECB President, Christine Lagarde. Do not miss that conversation. That is 3 p.m. UK time tomorrow, the head of the ECB, of course. Coming up, can SAP overtake ASML to become Europe's most valuable tech firm? We're going to look ahead to the software firm's third quarter earnings and Bloomberg sit down with the ASML CEO on Tuesday after that shock cut to their outlook. That is coming up. This is Bloomberg.
Taiwan's economic resiliency comes from the partnership we have with friendly countries. Domestically, we have a strong, vertically integrated supply chain. This is why we believe Taiwan can play a crucial role in the democratic supply chain. We are heavily reliant on high-tech industries, especially in the rapidly developing semiconductor sector. However, for Taiwan's economy to achieve comprehensive growth, we cannot rely solely on high-tech industries. That's why we proposed a dual-axis transformation for small and medium-sized enterprises. We aim to help our traditional industries and small to medium-sized enterprises enter the AI era. We will use government resources to assist them in adopting AI applications and integrating with this industry, allowing Taiwan's economy to grow comprehensively.
So, Mr. Premier, the U.S. is going to have an election, a presidential election. It's just weeks away. Former President Trump previously said that Taiwan took chip business from the U.S. and asked Taiwan to pay protection fees. And do you think Taiwan should continue to allow semiconductor manufacturers to, like TSMC, to build factories overseas?
Taiwan also needs to rely on advanced countries for new technologies in materials and equipment. I often say that the government has a responsibility to Taiwan's industries, and Taiwan has a responsibility to the world.
Mr. Trump also said Taiwan should increase military spending to 10% of gross domestic product, and I wonder if that's possible in your view.
Taiwan has a very large neighbour with significant ambitions toward it, so Taiwan must take responsibility for safeguarding our sovereignty and national security. In next year's central government budget, we have allocated more than 640 billion Taiwan dollars for defence. This will bring our defence spending to approximately 2.4 to 2.6% of GDP. While we cannot allocate 10% of GDP to defence in one go, we have increased the budget compared to the past. We also hope that through Taiwan's efforts, the world will recognise Taiwan's determination and provide greater support. What we're maintaining is not only Taiwan's security, but also the peace and stability of the entire Indo-Pacific region.
Taiwanese Premier Jung-tai speaking with Bloomberg's Editor-in-Chief Emeritus Matt Winkler. Now, tomorrow morning, we're going to be speaking to SAP's CFO, Dominic Assam, to discuss their Q3 earnings. That interview is at 6:30 UK time, and their earnings are out after the bell later today. Also, tomorrow, we're going to have a conversation with the CEO of ASML as well. Do not miss that conversation. Plus, DeepMind in focus as well. Stay with us. This is Bloomberg.